Hi, and welcome to the July 2017 Downtown Pittsburgh IBD Meetup presentation. My name is Eric Rossi. I'm a co-organizer with this meetup group. And if you found this video on YouTube and you're interested in learning more about the group or joining the group, you can use this link here to access the group's meetup page. So the mission statement for our group is to educate individual investors about the CAN-SLIM investing strategy, which was developed by William J. O'Neill. And this means identifying the best educational material, whether it be from books or online content such as webinars and videos. And this presentation is for educational purposes only. I'm not recommending any securities to buy or sell. Investing in stocks does carry risk and you can lose your capital. I'm a non-professional volunteer investor. Investors Business Daily, IBD, and CAN-SLIM are registered trademarks of Investors Business Daily, Inc. MarketSmith is a registered trademark of MarketSmith, Inc. And Meetup is a registered trademark of Meetup, Inc. This video assumes that you're familiar with the CAN-SLIM investing strategy developed by William J. O'Neill at Investors Business Daily. And at a minimum, viewers should read this green book here, How to Make Money in Stocks, before viewing this video. You're certainly welcome to watch this if you have not read that book, but it'll make a lot more sense if you have some background in CAN-SLIM investing. There's also a book called How to Make Money in Stocks Getting Started by Matthew Galgani, which is much shorter than this green book and more of an introduction. That would also be, if you don't want to take the plunge and read the big book, you could read the small book first. Topics for this month, we'll do the market dashboard as always. Then we'll finish up our series on CAN-SLIM with the M in CAN-SLIM, which stands for market direction. We'll look at the current market. We'll look at, I'll share my current holdings and my watch list as an example. And maybe if we have some time, we'll look at a recent trade or two, and then we'll conclude. Okay, so the market dashboard, the big picture in Investors Business Daily, where they provide three values for the market conditions. Right now it's in a confirmed uptrend, which is green. So that means that the market's showing signs of accumulation. It's in an uptrend, not going sideways, not going down. So it's a good time to be buying growth stocks. The uptrend health, as I call it, shows the duration of the current uptrend. We have now gone over a year without the market going into a correction. And I saw a stat on this the other day that the market hasn't had even a 5% pullback in I think in about a year. So it's one of the longest running times without any type of pullback. You usually within these overall market uptrends, you'll get a 10%, 15%, maybe more pullback, and then the market will continue higher. But this one, we've been going a long time without one. And the NASDAQ is up 30.3% in the past year. So it's certainly, the longer this goes on, the more likely historically we are to experience some type of pullback or correction. But nobody knows when that's going to happen, so we just have to keep an eye out for it. Distribution days, these are days where the market is selling off in volume that is above average or above at least the prior day. So we're at a medium count on this, 4 and 5 respectively for the S&P 500 and the NASDAQ. Generally, when you get into like really 6 is just getting on the border of on the high side. When you get into 8 to 10 days, we usually the market, that's when the market is having some type of pullback. And for the Federal Reserve activity, there's been 3 interest rate raises in the past year, one in December of last year and then one in March and June of this year. One more rate increase is possible for this year, and then the Fed has forecasted 3 for next year. So this is a negative for growth stocks because often when interest rates are increasing, it means that the cost to borrow money is going up. Companies who maybe had more debt in prior years because interest rates were so low are now not quite as profitable. And just historically, when interest rates are rising, the market tends to not perform as well as it does when interest rates are, let's say, going down. But given that the market is acting fine and it doesn't appear that these rate increase announcements are really affecting a whole lot right now. But I suspect eventually they will if we get enough of them. Okay, the S&P 500 is trading above its 50-day moving average. It's up about 10% for the year, and IBD assigned it an accumulation distribution rating of B. A is the best, E is the worst, so B is good. We get a green there. The NASDAQ is also above its 50-day moving average. It's outperforming the S&P 500, up about 19% for the year, but it has currently a C- accumulation distribution rating because it's sold off a little more heavily than the S&P 500 during a couple recent down days. So this gets a yellow for right now. And the IBD 50, which is a composite of the top 50 growth stocks according to IBD's algorithm, this is also above its 50-day moving average. It's outperforming the NASDAQ and S&P 500 for the year, which is good. This is a recent development. It was not doing so up until recently. So that gets a green as well. And this slide here has been unchanged for a very long time. Our last bull market started in March 2009 after the financial crisis. So we are in a very, very long bull market right now. And it's actually the longest running bull market that I know of ever. There could be, maybe there was one that was longer than this, but without some type of meaningful correction, the market's been going really strong for a long time here. So that's it's something to be cautious about, that it's not like we're coming out of a big bear market where the market is going to tend to make some really big gains in a short period. It's tending to be smaller gains, the movement is not as fast up or down. The market's just been kind of slowly chugging higher this year. And intermediate corrections, which are shorter, smaller corrections, like in the 10% range, we have 9 of those in the current bull market. Again, historically, that's a high number, but we haven't had one in over a year now. So certainly the longer that goes on, the more likely we are to have some type of correction, because what goes up must come down. And it won't necessarily retrace the entire move from the past year or 6 months or whatever, but it's a natural cycle for the market to go up and then to come back down for a little bit, take a rest, and then move higher. Okay, so this month we'll finish the Can Slim special here, kind of back to basics. And this month is the M. The M stands for market direction. Sorry, I apologize for missing that word there. And material is from chapter 8 of Bill O'Neill's book, How to Make Money in Stocks. That's the green book I showed at the beginning. So just a couple slides here, and I kind of meshed my own experience here with some of the information in Bill O'Neill's book. So there's 3 directions that the market can be moving at any time, and this applies to stocks too. They can be going up, they can be going down, or they can be going sideways. The Can Slim investing strategy is centered around trading growth stocks during an up market or a bull market. Okay, there's other strategies where you can make money in a sideways market. There are option strategies where you're actually betting on a stock or an index to trade within a certain range and not trade outside of that range, which works really well in a sideways market. Growth stocks in a sideways market are okay. They're probably going to go sideways as well. They're probably not going to do a whole lot, but you won't necessarily get stopped out or have to sell for profits. So it's okay to sell. It's okay, in my opinion, to own stocks during a sideways market. You just can't expect to be making big gains like you will in an up market. And a down market, again, there's strategies to make money in down markets. You can short stocks. You can buy ETFs that go out on the short side. You could buy options that will profit from that type of condition. But we're just focusing here on identifying an up market and when to be buying growth stocks and when not to be. And one thing to keep in mind is that when the market has a significant correction and starts to move higher, so when the market has come down and starts to move higher, which let's say the market's moving along here, moving along, and then it comes down, and when you see this and you see the market start to move back up here, these points are really are often provide the greatest opportunities, because in this condition, growth stocks are going to tend to be doing the same thing. They're going to tend to be following the same pattern as the market. So if you see the market doing this, this is kind of like it's making a cup base, and when a bottom appears to have been formed and we're moving higher, is a really good time that you can make some big profits. Now, with us not having a pullback like this in the past year or more, there hasn't been this type of opportunity. But the market's been moving just steadily higher, and there has been money to be made. Oh, sorry about this. Apparently PowerPoint is smarter than I am. Okay, so which indices should you follow? So what is the general market? Well, that's kind of open to interpretation, but the indices that are generally followed are the S&P 500. That's a composite of 500 of some what are considered to be some of the I'll say the biggest and the most profitable, not even the most profitable, but 500 of very well-known companies. um, and then we have the NASDAQ, which is basically the younger, this tends to be the younger, more entrepreneurial technology. This includes technology stocks. Frankly, I think this is the most relevant for CAN-SLIM investing. I don't think the S&P 500 is so relevant. And the NASDAQ has, for a very long time now, been outperforming the S&P 500. So if you want to compare your performance to a benchmark, the NASDAQ is a good one to use, because it's more challenging to outperform the NASDAQ than the S&P 500. And the NASDAQ is more relevant if you're buying stocks from, let's say, the IBD 50 or from Investors Business Daily, like their newspaper, because most of them reside in the NASDAQ, not so much in the S&P 500. There's also the Dow Jones Industrial Average, which is comprised, I believe, of 30 stocks. And then there's the Russell 2000, which is small cap stocks. And the list goes on. There's a lot of different indices that you can follow. Personally, I think the NASDAQ is the most relevant, especially for CAN-SLIM investing. But it is helpful to watch more than one index, because they each have their own personality. And when we get past the next slide, I'm going to show what happened at the Trump election and how the S&P 500 was giving a clue that maybe the market had hit a short-term bottom, and you didn't see it as clearly on the NASDAQ. So it's best to ebb and flow with the market, and this is something I heard in an old webinar that IBD had, where they were interviewing it was either a meetup leader or a professional investor, and he said, you don't necessarily want to, just because IBD puts the market in a confirmed uptrend doesn't mean that you should go and fill up your whole portfolio in one day. Okay, and likewise, if IBD puts the market in a correction, you shouldn't just sell everything you have. Okay, you should be flowing with the market. So as the market's moving up and showing increasing signs of strength, you can increase your exposure. And if the market starts to turn down and start showing distribution days and start selling off, then that's time to reduce your exposure. Start selling off maybe your weaker performing stocks. Sell off half of some of your positions, okay? IBD does make it easy to follow the market with their market pulse, which I'll show in a second. And that has three possible values. Confirmed uptrend. This is meaning the market's acting great, and buying CAN-SLIM stocks is, it's a good time to buy stocks. Uptrend under pressure means that there's been some selling, but it hasn't completely disturbed the uptrend that's in progress. And correction means that the market is selling off. and you want to avoid buying growth stocks. Now, when the market is in a correction, is oftentimes when the market starts to come out of that correction is the best opportunities for big gains. Okay, so if the market goes into a correction, it's definitely not a time to walk away and ignore the market. If anything, you want to watch it more closely because there's going to be some really good opportunities when that correction ends. The market is moving up the vast majority of the time. Okay, we'll look at a chart here, a monthly chart, and you'll see that. And bear markets are rare historically. So if you're going to err on one side or the other, in general, it's better to err on the side of being bullish because that's what the market has historically showed for many, many years. And it's great to have a hypothesis of where you think the market is headed, whether that be up, down, or sideways, but always have a backup plan in case the market moves against you. So just because you think the market is going to go up doesn't mean that you should be stubborn and not sell your stocks if they start going down. Because your stocks, knowing what the market's doing is good, but your stocks are ultimately going to tell you if they should be held or if they should be sold for a loss to limit your losses, or if they should be sold for taking your profits. You want to have sell rules based around the stocks themselves, not based around necessarily the market action. And observing the market on a daily basis ensures that you recognize changes in trend as soon as they happen. So that's the advantage of checking the market pulse in IBD on a daily basis. Okay, so I'm going to show you how to find the market pulse on investors.com, and then I'll show you how to find the M in IBD stock checkup. So let's switch over here to investors.com. If you log in here and you go to the market trend and then the big picture, here's where you can see what the market pulse is on any given day. Okay, so if we just scroll down here, here's the market pulse. Okay, and it tells us what happened yesterday in this case. It tells us what the market outlook is, the market, confirmed uptrend, uptrend under pressure, or correction. It gives us the distribution day count. And, this is basically the M. And, if you want to get this M out of CanSlim and you want to do it in 1 minute a day, this is a good way to get it right here. You can also get this in the stock checkup. So if you go to research and then IBD stock checkup, and let's just look at Avago. Broadcom. So if we look here on the stock checkup, you get here right at the top, market direction and industry group. So here it's going to tell us the market's in a confirmed uptrend right here. Okay, so it tells us green means green is pass, yellow is meaning when it's uptrend under pressure, this will turn yellow, and red when it's in a correction. Okay, so you can also you can also get a snapshot of the general market direction right there. Okay, so let's switch over to MarketSmith and look at a couple things. Okay, so like I said, the market is generally moving up in historically. So if you look here, basically since the end of the financial crisis here, the market's been moving up for 8 years. Okay, and you can see in here we had a little pullback here, we had a correction here, we had a little correction here, but you can see that these really big pullbacks like this are rare historically. We're looking at a chart here going back to 1993, and you can see here that we've got really only 2 big sell-offs in, 24, 25 years. 2 big sell-offs, and the rest of the time we've been moving up. So this is why I say if you look at the amount of time here where the market is selling off versus the amount of time it's going up, it is moving up most of the time. Okay, so we want to be bullish in general with the market. Now, the other thing I mentioned is that it's helpful to look at multiple indices, and I'll show you an example here. This day right here was the day of the Trump election was right around here. I think it was November 9th. If you look right before the election, the S&P 500 started selling off right into its 200-day moving average. And boom, look how it bounced off of it in not in some heavy volume, but you can see then it boom went up through the 50-day moving average. And this was the start right here of this nice move upwards. And you can see that looking back, it's always easy to look back and say, oh, I should have noticed right here and started going long. I personally was not vested going into the election because I didn't want to take the risk of a big sell-off based on the election results. But looking back, this action here was very positive leading into the election. And the market kept going afterwards, and it's been going ever since. And you can see on the NASDAQ here, it traded between the 50-day and the 200-day, but it didn't quite make it. It doesn't look the same. It has its own personality. So this is a case where, like I said, it's good to look at multiple indices if you're going to look at any. I wouldn't look at personally more than a few, the NASDAQ, the S&P 500, and maybe the Russell. But if you have a lot of time and you want to, you can certainly look at many, many indices together. All right, so if you don't have Bill O'Neill's book that I showed earlier, the green book, you can also learn about CanSlim on investors.com. If you go to the How to Invest tab here and click on the CanSlim investing system, or the letters, each letter will show up here. You can click on the M and learn more about this. Okay, market analysis. So the past 2 months actually, since I've done a video, you can see, the market's still moving up. We're in a nice little uptrend right here, and we've made new highs from the prior high here at the end of the technology boom in 2000. So right now the market's looking good. I'm only looking at the NASDAQ here, but you can see we got this pretty nice uptrend going here, and the market's been trading in this really nice, just kind of a nice little channel here for quite a while. So as long as that keeps happening, it's a good time to own stocks, and so far there's no reason to not be investing in growth stocks. Okay, current holdings. So I'll just share what I'm holding right now, and maybe some of the thought process behind buying these stocks. Okay, so LGI Homes. This stock is forming this long cup-shaped base, 200 days long, and fairly deep, 34%. During this time, the market was doing pretty well. And you can see that it's been coming up here, and it didn't form a handle, but it flirted with the buy point here, the pivot point, and then it boom went higher here on heavy volume this day, 140% above average volume. So I bought this stock on this day. I bought a full position, and the next day, and actually it was a kind of a gap up day too, if you look. And the next day we had some follow-up buying. And then the next day after that, we had a support day here. Even though it was down for the day, it closed high in the range and in above average volume. So this breakout was very good. The relative strength line's coming up, and this follow-up buying is a real key to the strength of a breakout and the likelihood of it continuing to move higher. Since then, we're kind of going sideways, and volume's lightening up, so sideways and lighter volume is a-okay. And fundamentals on the stock are okay. They're not the best I've seen. In particular, the last quarter, they reported a decline in earnings growth, and sales growth was flat over the prior year. But you can see that the stock gapped up a lot and heavy volume that day, and it's been moving nicely higher. So there's something in that earnings report that institutions are liking as they're bidding this stock higher. And maybe it's the estimate for the current quarter is a 32% increase. So maybe this was just a temporary blip in the radar here for just one quarter. But this stock is extended now, so I wouldn't buy it, but it's working nicely so far. Trivago, this stock just broke out of this cup base, and it formed a cup with handle back here, and this was a really nice base. You can see how light the volume was in the handle, really nice, really light volume, and then boom, it takes off, and it shot up here. You can see it shot up over 50% from the buy point, and then it formed this current base. And this again was a cup. There was no handle here. But again, this stock, just like the last one, made a nice powerful breakout here. Volume was about 100% above average. And then we had follow-on buying the next day. Now, after that, we had this wild, very wide bar red day, which is concerning. And it was 12% down in one day, which is a lot. So this stock is a little bit volatile, but it held the 10-day moving average here. So I actually didn't initially try the stock back here. I tried it over in here, and you can see it broke out again, and then it pulled back in light volume, decreasing volume. You can see how volume was tapering off here, and then it moved. It pulled back again in light volume to the 10-day, and boom, it went higher. So I actually made an add-on buy on this day, because this day was a pocket pivot with the volume was up higher than any down day in the past 2 weeks, and it bounced higher off that 10-week moving average. It was still within range of that day here, so I made my add-on buy here, which the add-on buy is not working out greatly right now. I still have it, but you can see then this next day we had it was down, but it found support, closed in about the middle range, and it's just riding the 10-day moving average nicely. So this stock is a little more volatile than I prefer, but I'm holding it. Relative strength is coming up. You can see earnings and sales growth is really nice right now. We've only got 2 quarters of earnings growth, but the estimate for next year is really high, and the estimate for this quarter is triple digits again. So this stock could become a big winner if it keeps posting earnings and sales growth like this. This is in buy range. It's 4% from the pivot. It's a little bit extended, but you could go for this right now. And then your risk is you could cut your losses if the stock closes below this 21.89 level. So you're only risking 4%, which isn't bad. There's a glitch in MarketSmith right now, so these lines aren't showing up correctly, but they said they're going to hope to fix it this week. So I apologize for that. Log Me In is, I read this as a double bottom right here, which is what I have drawn here. So I tried this stock. I initially got in when it undercut this 106.85, and then it came back above it over here. So I bought half a position there, and I bought the other half when it came up through the 50-day moving average, and it came through this trend line. And since then, it's going sideways, and earnings is due next week. So I'm probably going to have to sell this for about break even before earnings, because I'm not going to hold it through the earnings report unless I have a nice profit. So this could be a good one to watch before going into the earnings report to see if it can break out. Sino Corporation, this one, I made an initial buy here. It's forming a flat base. Made an initial buy when it broke this trend line back here. It's kind of hovering right around that trend line, but again, it's holding. This thing is holding the 50-day moving average nicely. It's holding the 10-day moving average, and I'm looking now for this to form a handle. You can see this looks like a cup, and it's forming a handle right here. So I have an alarm set right here. I'd like a couple more days of sideways or slightly down, and then it to break out of that handle area, and I will buy the rest of my position. So this one, in my mind, is buyable right now. It's only 3.5% from the 50-day moving average, which you could use as your stop. So very limited risk on this. And Momo, just bought this week as it broke this trend line on this day, and it had been hitting resistance here right at 42 for quite a number of times. So it broke above that, and I bought it, and it's trading sideways, so it's okay. It's not doing much. It's kind of a cup look. I would like it to come up here and then form a handle, and then I'll buy the rest of my position. But again, this one's buyable right now. I'd say uh, whether you'd want to use the 50-day moving average is a different story because that's 7% away. I'm using the 10-day moving average right now. So really, if it closes decisively below 42, I would be inclined to get out of this. So pretty limited risk on this one. And this stock has exceptional fundamentals. So I like this one a lot right now. Okay, so those are current positions I'm holding. We'll just run through some watch list stocks. Nutrisystem is formed this base here. It broke out this week, and I was going to buy this, but it has its earnings report next week, and I'm not too confident that it's going to provide enough profit cushion to justify me holding it through the earnings report. So this one is buyable. You could buy it now if you want, and then if you don't get enough profit cushion before the earnings report, you could just sell it, or you could just see what happens on the earnings report. Essent Group is looking very nice. You can see it's kind of a saucer or a cup maybe, and it's forming this handle over here, and the handle is very tight, and volume has generally been low. So I'm liking this one a lot. It's coming to a point here where it's got the 10-day moving average and this pivot point are kind of squeezing it. So it's going to go one way or the other here at some point. So I like that one a lot. Winnebago, this stock has decent fundamentals, not as great as I would like, but it did have a really nice reaction to its earnings report, and it's come up quite a bit, and now it's consolidating, mostly going sideways here in lower volume. Volume is declining as it consolidates, so that's good. This you could buy right now. Ideally, I hope this goes sideways maybe another week so these moving averages can catch up, and then maybe it'll break out of this cup with handle. Trade Desk, this stock is a little bit, maybe it's not so wild, but this stock had a pocket pivot right here, this high volume day bouncing off the 50-day and 10-day moving average. So this day was buyable right here. It's still buyable right now as it's still trading in the range of that day, and your risk here is very limited, only like 2% if you want to use the moving averages as your stop. So this one's good. This is estimated for earnings next week. I need to check on that before thinking about this, but this is kind of again a cup looking base, so maybe it'll form a little handle here, and that would be provide a point to buy this, a new buy point. But this stock's made a really nice move out of this base, and then you can see it made a nice move out of this base. So it has a history of making these nice moves between these bases. So it's a relatively new name as well, lesser known. MDC Holdings, this stock, I actually bought this recently and then sold it because it had a failed breakout here. But it's still trading sideways. You could certainly buy it right now. It's not far from the 50-day. So if you use this 50-day, the red line as your stop, you're limited risk. But it technically is trading below the buy point. But this one's okay. It's a slower mover, but it has good fundamentals. Weibo, they had shown this as a double bottom, and they just now, MarketSmith changed it for some reason, but I'd still call it a double bottom like this, and I'm looking for it to break this trend line so I can make an initial buy and then look for a breakout above this 80.19 buy point, or you could wait for it to break out of this 82.28. But this stock was a huge winner last year, and it just keeps on going strong. It had this huge gap up on its last earnings report, so I like this one a lot. Applied Materials is forming kind of a cup looking base too, and it's potentially forming a handle here. Volume's tapering off here as it starts to pull back. This stock has been a big winner too. It made this really nice move out of this last base. So this is a third stage base. This stock has a lot of institutional following. So this is a really good one as well. Sierra Wireless, this one's got a flat base. It had a pocket pivot here, just like Trade Desk, and now it's pulling back. So I would again interpret this somewhat of a cup with handle if it gets a couple more days of going sideways, and then you could use this 31.40 as a buy point there. This stock has very good earnings growth. You can see it's kind of turning around, and sales growth is not as great, but this stock has had really powerful moves out of its recent earnings reports. Cotiviti I bought this week. I bought this day on this breakout. It had a really nice looking breakout out of this cup, and then it gapped up the next day. So I bought half my position here and half here, and then half this day, and then I had to sell. I sold it here because the breakout failed. The stock had this red day and heavy volume. It closed below the buy point. But I'm watching it now. This could be kind of a high handle up here. So I have an alert set up here, 45.97, and I'm also looking for it to break back above 43. It is quieting down a little bit, and it's holding the 10-day moving average. So if this starts moving higher again, I will buy it again as long as I have buying power. Avago is the last watch list stock, and you can see that it's forming a cup. This stock has been really nice. It's been a very steady mover, steadily moving up. It's not very volatile, and it has really good fundamentals. So it's forming a cup, and maybe it'll form a handle right now. You can see how quiet the volume was these last 2 days. This is really, really positive action here. So if this thing breaks above this 254.54 point and or this 257, I'm really liking this one too. Okay, so if you found this video on YouTube and you're not a member of the meetup group, you can join by following the below link. A free meetup account is required, and files like this presentation are only distributed to members of the group. You can't get them otherwise, and if you join the group, you'll be notified when a new video is posted. So if you want to join the group, you can do so right using that link. And questions from this month, I had a few questions from one of our subscribers on YouTube. He said that if Leaderboard and MarketSmith are outside of your budget, then is IBD Digital a good service to use instead? In order of services, I would say MarketSmith is by far the best. It is also the most expensive by far. Leaderboard is good if you want to make things a little bit easier on yourself and just invest in what's on Leaderboard and not have to go through the newspaper. And but if you don't want to do either of those, IBD Digital is much less expensive, and it does provide you with a lot of resources on their website and their newspaper, but it does require more time on your part to sift through all that and decide how you want to use it. So I would say if you have time and not money, you could certainly start with IBD Digital. If you have money and you want to save the most amount of time, I would go with Leaderboard or MarketSmith. Just my opinion. Another question was, does Leaderboard only annotate charts of stocks that are currently on the leaderboard? The answer is no. They annotate stocks that are on Leaderboard or have been on Leaderboard recently. If the stock has not been on Leaderboard, then it's not annotated, is my understanding. And no, they don't annotate charts of all IBD 50 stocks. At least they didn't when I subscribed to it a couple years ago. And the last question is, what's a good way to improve my chart reading skills? Again, I would say the best way to improve your chart reading skills, I would go to the IBD, either the newspaper or the electronic version, and I would look at their mini charts and try to read the mini chart by yourself before reading what their interpretation is. So let me show an example here. So if you find like the IBD 50 in here, they have all these mini charts. And if my computer will not freeze up, I can actually show them to you. Here we go. So if you want to improve your chart reading skills, one of my suggestions would be go in the newspaper like this and put your hand over the screen to block this out, or you could look at it like this and try to read this chart on your own. What do you see in the chart? Is it extended from a base? Is it setting up in a base? What type of base does it look like? What do you see? And what would you, if you were writing this caption down here, what would you write? And then compare it to what IBD wrote. This is a really good way to improve your chart reading skills. And just see how many, you can even keep count of how many do you have the same interpretation as them. And hopefully you get better with it over time. Another way you can improve your chart reading is in Bill O'Neill's book, the green book I showed earlier. He has in there blank charts that you go in and you mark up yourself, and then they show you the solution or their interpretation. Because there's not necessarily a right or wrong answer when it comes to reading charts. Different people interpret charts different ways, but the fundamentals, that's a really good way to learn it. To look at it at examples in IBD or books. Gil Morales and Chris Catcher have a good book that has a bunch of charts in it that you go mark them up, and then they give you their interpretation. So there's some options there of how to improve your chart reading skills, but it definitely takes a long time to get proficient at it. All right, next video I'm going to do kind of a special topic. One of my favorite books of all time is Think and Grow Rich by Napoleon Hill. I'm going to talk about how we can apply that to trading. So it'll be a Think and Grow Rich trading special. So if you have suggestions for future topics or you have questions, just send those to me on Meetup. I answer all of my emails on there. And if you have a question, I'll include it in the next presentation. And if you have a suggestion for a topic, I'll definitely consider it for the next presentation. So thank you for your time, and the next video will be posted in September, 2 months from now. Happy trading.